Good afternoon, my fellow traders. Hope you all doing great. A quick and early update here on nat gas, gold, silver, crude oil. As I'm looking at some interesting pattern happening here on gas and gold. That's why I want to give you a very early update. Now, there are a few very important points I want to mention here on nat gas first. But first, we are looking at capital.com. We are getting a similar condition on all the other platforms. Now, the price is approaching a very good major structure trend continuation support that was recently broken in an uptrend, and that could still push the price higher. But that doesn't mean you buy here and you never come out of the trades. Now, there's a chance the price bounce and then it falls. Still a chance, but this is the bounce we need to capture to cut the profits. Now, for the buy entries, as we are above this zone, I'll be looking for the clear engulfers or double bottom pattern. If that happens, I'll be going long, short term only, come out 1-to-1 initially, and 1.2-to-1 I want to manage, and then we can look if the price breaks above 50 EMA. If that happens, we can then look for the next continuation buy trades. So that is something for the bullish scenario. Now, one more pattern I'm looking here on long term. Now, remember, very important to cut your profits if there is condition. No condition, price can still fall since there is a strong bearish pressure. Now, if the zone is broken, which is 3.280, if this level is broken, the lower level, price can then form a head and shoulder bearish pattern, retest, and then fall. Now, this pattern is still not very strong here on capital.com because we have this recent support. But if you look here on NEMIX, that is now in the process. Now, here we do not have any support until here, but we do have this trend support. If the price hit this trend support on 4 hour, look for engulfers or double bottom. If there is no double bottoms or engulfer, if you look here, we have already formed a left shoulder, and then we have a head, and then price might form a right shoulder, a bounce from here. Now, this bounce might be enough to cut this trade if there is an entry condition, come out quickly, and then price can likely to fall down to the next support. Now, that support is very important. That is a very strong level from where we can expect some sort of reversal. Now, after that, we have one more support, which is right here. That is the strongest level, but that is something quite far. That is why it is very important to look for this area. This can also form a head and shoulder pattern, go beyond this trend line and form a pattern here, and then form a right shoulder like this. That is something I'll keep you guys informed in my videos. That is why I want to give you heads up. If there is a condition, I'm not expecting full reversal. A bounce that is enough to cut your profits with good reward to risk ratio. So keep an eye and we'll see how it goes. For now, keep looking for the support on capital.com. Trend line on NEMIX, MCX, this support, if that is broken, then we are looking for the head and shoulder pattern. And if you look here on Ovanda, a trend line here, a trend support here on Ovanda, we have a left shoulder, and we might see a formation of right shoulder, could be from this trend line as well. If broken below the trend line, we are looking at this next support. Not a very strong level, but still a very good level. So that is something I want to give you heads up. Keep an eye and look for conditions only. No conditions mean no entries. Price action is talking to you. It tells you if it's going to go up or not. If it gives you a condition, then you have stop loss there. If the things goes against you, you know that price, you're not going to lose money more than your expected loss. Coming here on gold. Now, I've already sent a video to my members. If you are my YouTube members, it's just a $5 or £5 a month, $5 or £5 a month. I've just posted a video. Price was somewhere here at this point. And since my video, it's already pushed up around 1500 pips. Now, the gold just created a recent anchor support, which is right here, these numbers in blue. Broken above after the retest, break above, made a new high, forming a pin bar. That is just my general bias, not an entry condition I teach. But a general bias, if that turns out to be a bullish candle, a 382 candle, that's a buying pressure and we can still see a further spike up. But for my entries, I want to see some more pullback to 20 or 50 EMA, a solid pullback to go long. But looking at a retest and rejection, that tells me that price is likely gonna push up and keep on pushing up. Again, for my entries, a pullback entry bullish is something. Overall, we are bullish. Previous anchors has been broken. Retesting this anchor, now becoming a support, and we can see a possible bounce. Next up, we have silver. Silver is still in the process of a pullback. No conditions yet, but I want to see some more pullback to 50 EMA and look for bullish engulfing pattern to go long. That is all I'm looking at on silver. Nothing else. Or break above this high. Once that happens, we have a same anchor like gold with a retest and engulfing patterns to go long. That is all we are looking at on silver. Crude oil is pushing down, and I'm expecting some more push down maybe at the open of US session. Now, at this point, we are still looking at the support, which is right here, 56.0 16 goes to 57.92. I'm still expecting a price to come down, form some sort of condition like bullish engulfers or double bottom to go long. So I'm looking for buy entries from here, but if there is no condition, price pushes up, retest 50 EMA or below 50 EMA. If the price forms bearish engulfing pattern, I'll be just going short till here until I find my entry condition to buy from the green zone. So that's it for today's video. Hope you got a value. If yes, hit like button for me, subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Till then, take care.